All right, y'all, in today's video, I'm going to be sharing with you the exact strategy that allows me to be a dividend nomad. Now, this is part of my free course that I'm releasing, and I highly suggest you watch the whole course, but you should definitely watch this video until the very end because it's going to help you understand everything that I do that allows me to live this life. And I'm going to break down everything step by step, detail by detail, so it's easy to understand. So let's get into it. I got a presentation to show you guys just so everything's visual and it's much easier to see, much easier to understand. So we're going to do that right now. I'm going to record the screen for you guys. And 3, 2, 1, bam. All right. So first of all, here we are on my YouTube channel. If you go to this playlist tab right here, you open that up, you can see right here, the Freedom Abroad Blueprint Program. This is part of this free course. And if you just click view the full playlist, you can see all the videos here. This is the lesson 1, then lesson 2, lesson 3, so on and so forth. And I'll be releasing them all week by week. But this is probably going to be one of the most important ones, so I suggest you watch it. So let's dive into it and let's get started. So this is the Freedom Abroad Blueprint. And I like to start off every lesson with a quote from somebody. And you can see here, the investing legend himself, Warren Buffett, "A dollar invested is a worker hired for the rest of your life." And so right now, I'm going to share with you guys my $70,000 passive income portfolio breakdown. I'm going to share with you the details of this portfolio and what's in it. And I'm going to explain each and every position to you and why I chose that and the allocation percentage, everything. So it's clear to understand how you can do something similar and be able to live abroad and have total freedom like I do, even without a large amount of money. So let's get into my $70,000 portfolio. This is just one of many, though I have many portfolios, but this is just the main one that I share in this channel. And this is the exact strategy that I use to be a dividend nomad. So this exact strategy right here, in this particular portfolio, I had $30,000 in it a year ago, and now it's worth $70,000, right? This is the exact strategy I used to grow from 30,000 to 70,000. So I'm going to share that with you guys. Right now, this portfolio is generating about $2,000 per month minimum, and that powers my life abroad because when I'm living in Asia, and anywhere in Asia, like, Vietnam, Cambodia, I live in China, Indonesia, Malaysia, Thailand, Philippines, whatever. You can live in those places really, really, really wonderful life for $1,500 or less. And so that's the power of what you can do with this type of portfolio. So first of all, I'm going to share with you my investing philosophy before we get into all the details. But it's really simple. Basically, income first, freedom now. So what does that look like? I want income right now. I want money now so I can exit the 9 to 5. I see a lot of people commenting on videos saying, oh, well, the index outperforms and does better. Of course it does. But you got to wait 30 or 40 years or 50 years or like Warren Buffett, 80 freaking years to have some money. I don't care about all of that. I'm not trying to get rich. I'm trying to be free, right? I don't want to work a 9 to 5. I want my time to myself so I can do what I want to do when I want to do it and work on the things I love. And the only way to do that is to get freedom as fast as possible. And what do you need to be free? Income. You need steady cash flow now. And that's why I focus on income first, growth later, right? Once I get free, right? Once you're free from the 9 to 5 and you have the income where you no longer need to work, now you can focus on growth, right? Now, because now you don't have nothing to do. You don't have a job to occupy your time. You can use the extra money to invest towards growth stocks. You can also use the extra money to invest in yourself, to start a business doing something that you love or something like that, instead of working a 9 to 5 for some stupid boss that you don't like. That's why we do income first, growth later. And myself personally, in my own philosophy, I favor index-based income to reduce single stock headline risk. What does that mean? right? So for example, I prefer to invest in like the S&P 500, one that pays income, because the S&P 500 is like 500 of the best companies in the world, right? But if you have a single stock, especially a single stock that's like an income stock, like these yield max things like TSLY, Tesla, or CONY, Coney, something like that, they're one single company. And if that one single company, say Elon Musk sends out a tweet or X, whatever you want to call it, and his stock tanks, so does your income. But when you're invested in the S&P 500, if Elon Musk goes and tweets some bullcrap and Tesla tanks, the S&P 500 is not going to tank, because there's 499 other companies that are helping you sustain that level, right? They're not just going to fall apart because one person decides to say something stupid. So you don't have that headline risk when you favor an index-based approach, and that's what I do. Okay, and also, lastly, I want weekly or monthly cash flow. Why? Because it's lower stress, less planning. If you're getting paid every quarter like the traditional style, it requires a lot of planning and all kind of other stuff to make your money work. But if you're getting paid every week or every month, it's just less hassle, because you know every single week I'm going to get this much money. Like if I'm running low on money, it doesn't matter. A couple of days later, I'm going to get money again. It's just much easier to manage and low stress. And that's why I prefer a weekly or a monthly cash flow approach. So right now, I'm going to show you guys what's in my current portfolio and give you a snapshot of the allocation, like how much percentage are those in my portfolio. Then after that, I'm going to break down each and every position as to why I chose that particular position and why I chose that allocation percentage. So here we go. Let's look at it. So first in my portfolio, the biggest allocation, the biggest percentage is XDTE and QDTE. There's 70 to 80% of my portfolio, and this is my core engine. This is what I base my budget around, are these two, because this is my core. This is like the main driver of the portfolio, and that's why it's 70 to 80% of the portfolio. And also, as you can see, XDTE is the S&P 500, which is basically the index, and QDTE, which is the NASDAQ 100, which is the tech index. So they're basically the index, and most of my money is in the index. Next, I have QQQI, which is 5% of the portfolio. And this is income, monthly income, plus a little bit of growth. So, income stops when you stop working, right? And so, this is why I focus on income now, so I can stop working and my income keeps coming, right? So, anyway, I got 5% income plus a little bit of growth, because QQQI, think of something like a JEPQ, something like that. It's kind of the same thing. YBTC, I have 10% in YBTC, which is Bitcoin, or Bitcoin covered call ETF, also pays every single week. And then I have a mega yield momentum slot, and I allocate 5 to 10% of my portfolio to that. And that is a rotational thing. And then I have cash, or cash buffer. It's just dry powder, so I can buy dips when dips happen. So let's get into these positions. I'm going to break down each and every one of these and why I use these, right? So this is my core engine, XDTE, QDTE, about 70 to 80% of my portfolio at any given time. And these, if you're not familiar with these are by a company called Roundhill. QDT or XDTE is the S&P 500 index, and it pays every single week. And then QDTE is the NASDAQ 100 index, and it also pays every single week. Now these are 0 DTE covered call ETFs. What that means is every single day they're selling call options on the index, and the money they make from selling those call options is the money they pay us. And that's what these are. They just follow the index. When the index goes up, these will go up. When the index goes down, these will go down. But they still pay you every single week, and they follow the index. Okay, and these two positions, they both target about a 25% annual yield. and they pay every single week. Okay, so about a 25% annual yield, and you get paid every single Friday. And then also, like I said, these are index based, right? They're basically tracking the index. So when you're selling covered calls, you don't get a whole lot of upside, but you do get some upside. But the thing is, these tend to like gradually go up or stay kind of flat, but they pay you consistently. So it's income you can rely on without worrying about your money disappearing. And that's why I like to use these. And then for me, the primary role of these two ETFs is my primary paycheck, right? This is what I base my budget around, are these two. So I use these two basically for my lower end of the budget. This is what I use for my survival abroad. And they track the index and they pay me. Okay, so the next one I mentioned, QQQI. This is my income plus my growth. All right, so this one tends to go up and not stay flat, but it also pays money. This is 5% of my portfolio. Now, this one is from a company called NEOS. This is the NEOS NASDAQ 100 High Income ETF. It's based on the 100 best tech companies in the world. And this one has a 13% annual yield, but it also grows. It also has some upside. You're going to get some growth just like you with the more traditional cover call ETF like JEPQ. But the thing is, QQQI has a better tax advantage than JEPQ. And I suggest you go to the NEOS website and read the prospectus about this fund, and you will understand the tax advantage of it and why this income is very, very tax friendly. So, like I said, this also pays monthly, right? This one doesn't pay weekly, but it pays one time every single month, and it is a tax advantage structure. And then the role of this in the portfolio is to add the tech upside, but without abandoning income. So it's not just all upside, I still get paid, right? So like I said, I base my budget around the QDT and XDTE, and this right here is just providing extra money that I can use to reinvest, or if I need more money that month, I can use this money to live off of, and I don't have to worry about the stock going down because this stock has a lot of growth built in. So next we have my BTC income exposure, or BTC exposure and income. This is through YBTC, and this is about 10% of my portfolio. So most people say you should invest like 5 to 10% into, Bitcoin or cryptocurrency now. So I decided to make my BTC exposure 10% of my portfolio. So this again is another ETF from the company called Roundhill, and they basically just trading Bitcoin futures like DTE covered call Bitcoin strategy. This provides weekly income. This right here pays me every single Thursday. And also it gives me exposure to my BTC or Bitcoin thesis that Bitcoin is going to continue to rise. Everybody's saying that. People are saying 150, 200,000 by the end of the year. They're even calling for $1 million value Bitcoin in the future. And so basically the whole world is saying that. And I don't think the whole world is going to be wrong. So I'm going to follow their idea, follow their thesis that Bitcoin is going to do well. And this gives me 10% exposure to Bitcoin doing well. But I get paid from it too. I'm not just putting my money in Bitcoin and not collecting any money. This is paying me income every single week. And like for me, I think my yield on cost is about 50%. 50% annual yield is amazing. So why pass up income when I get, and for the growth, when I can get both growth and income? I'm getting both from this. And this is why I chose this over investing in traditional Bitcoin, which I do have Bitcoin also, but in this particular portfolio, we're talking about getting money now to live now. This is how I use Bitcoin for that. Okay, so the role of this, like I mentioned, just express my belief that Bitcoin is going to do good and it's going to give me cash flow each and every single week. And then we're almost done with this part. I have my rotational mega yield slot. And this is make up like 5 to 10% of my portfolio. So what is the rotational mega yield? It's any stock or any ETF that has a 70% yield or higher, but it has momentum behind it. For example, MSTY, back in, not now, but before MSTY had a lot of momentum. It started at like $20. It went up to like 42, right? It has a lot of momentum and it's going in an upward trajectory, and it's paying like, it was paying like 100 and something percent yield, right? Massive yield, massive cash flow. And then when the momentum dies out and things start falling apart, that's when you rotate out of these. That's when you exit and sit on the sideline and wait for something else that's got some momentum and try to get in when you can catch the momentum and go on the upside. You don't want to get the momentum to the downside, because these mega yield ETFs, they cannot recover. Once they've dropped so much, it's really, really, really difficult to recover. And the longer you hold, the more money you lose. That's why you got to catch the momentum on the way up and get out when the momentum dries up. So it's rotational. All right. So like I said, you're not going to hold this forever. Like my QDT and XETE, like probably I hold forever, right? But this is not a forever hold. This is rotate with the trend. The trending is going up, the momentum's going up, you're in. When the momentum starts to dry up, you get out, take your money and walk away and look for another momentum play, or sit on the side and wait until one pops up. And so the role of this rotational mega yield slot is to boost total income and give you some opportunistic gains, right? So like I said, I'm budgeting my lifestyle on the XETE, QDTE, and this right here provides a big boost to that. And when it does, then I can use the extra money to do other things that I want to do, or have just a better quality of lifestyle, and use that money to grow the portfolio, right? I can take this mega yield income and put it into XETE or QDTE to raise my position in that, which raises my low, my base budget. It raises that because I'm taking this mega yield and adding to that, and it's raising, so my lifestyle gets better and better and better instead of worse, as long as you get out of this in time. So here's some optional rules that you can use for this. You enter with a clear uptrend, right? When you see the thing is going up, that's a good chance to enter and follow the trend up. Also, preset a risk limit or stop loss. How much money are you willing to lose trying to catch this momentum, this uptrend, right? Like, in case you're wrong, because you can't be right 100% of the time. And also, I keep the size small, 5 to 10% of the portfolio. Don't have a lot of weight in these single stock mega yield slots, right? Review it every week or every month to make sure the momentum is still there, because the momentum will dry up eventually. No matter what stock it is, the momentum will dry up, and that's when you want to cut your ties and be done with it. Not financial advice, none of this stuff. I'm just showing you guys what I do, okay? So the very last position I have in my portfolio is a cash buffer, and use that for rebalancing. So I keep cash because that gives me options to do stuff like buy the dips when you have these red days like we just had. I think yesterday we had a big red day. I just spent $2,000 like nothing just to buy some more shares, because I had the money sitting there and it was a good buying opportunity. So if you have some cash in your account, you have this opportunity to take care of to do those kind of things. And also, if you have extra cash in your account, instead of all of your money invested, you can fund some life events in case you got to bury somebody, or you have some kind of medical thing that's unexpected, right? You got to have a surgery, or you got to go to the dentist, or whatever you got to do. Some kind of event happens in your life, then you have that extra cash sitting there on the side that you can use and put to work instead of selling off your stocks. Also, you can smooth out your income variability. basically like rebalancing, right? Like if something gets out of weight, or the variability is really crazy, like you have a really high month, really low month, you can smooth that out by deploying the cash to make things smoother, so you don't have the super huge volatility, super huge swings, because I had that. So all these things I'm sharing with you guys are things that I've experienced and went through and done and made mistakes on, all that stuff. And I found out what works for me. And that's what I'm sharing with you guys here. Also, you can use the cash to keep your core at the target weight. So say you like I said, 70 to 80% is in my core, my XDTE, and say I have this mega yield booster and I caught the momentum just right and this thing's going up like a rocket. Now my portfolio is out of balance, right? And I need to take some money and add to my core to get the allocation back where I want it, in that 70 to 80% range. And that's where you use your cash for these type of things. So what does the cash flow look like? Very simple. For me, last year, I made $45,000 in distributions, which I know you see some people talk about they make that much a month. I don't know. Some of them don't show their portfolio. But for me, $45,000 a year in distributions is more than enough to live a really, really comfortable life here in Asia. Like I said, I spend about $1,200 per month, every single month, right? 45,000, that's like, what, how much is that? Almost $4,000 a month or something like that, right? And I'm only spending $1,200. So I have a whole lot of excess cash that I can reinvest or save for these emergencies and things like that. So $45,000 is plenty of money here in Asia. This year, I'm expecting a similar return, but more stability, because I worked out the kinks and figured out the mistakes. So now I'm going to be receiving about the same amount of money, but less volatility, more stable, less stress. But anyway, right now, at this point in time, in this portfolio, a typical month is over $2,000. There's some months where it's $2,500, some months where it's $3,000, something like that. But this does fluctuate. But $2,000 is the very low end. So I always make sure my budget is under $2,000, which I never spend that much anyway. I couldn't spend that much if I tried, to be honest with you, because it's just the lifestyle I live. But living costs overseas, especially in Southeast Asia, is usually $1,200 to $1,500. Like instead in Vietnam, actually in Vietnam and Philippines, I could live for $700 a month. I know because I've done it and live comfortably. But most people are going to spend around $1,200 to $1,500. If you're in Thailand or Philippines or Vietnam, something like that, you're probably going to spend that much, probably $1,200 or $1,500. I spend about $1,200 a month here in China. Actually, if you want to see a breakdown of how I spend my money here in China, I'll be more happy to make a video for you guys and share with you guys that stuff. Actually, I might go ahead and do that anyway. So anyway, why does this enable global freedom? Very simple. The income is much greater than the cost of living, right? So when your income is greater than how much it costs you to live, then work is optional, right? If you don't want to work, you don't have to work, which is wonderful. Like if you want to work, you can, but you just have that, that thing, knowing that like, if my boss does something stupid, I can just walk out the door. I don't even care because I don't need a job, right? So work is optional. Weekly and monthly payouts reduce your stress and planning, right? Like I said, if you're getting paid every single week like I do, if I'm running low on money, it doesn't matter. 2 days later, I'm getting paid again, right? So it's just really a lot less stress. Also, as I mentioned, geographical arbitrage, geography arbitrage, you can have a wonderful, normal, middle-class lifestyle for $1,500 or less per month, right? I'm not talking luxury lifestyle, yachts and Lamborghinis and shit. Just a normal, regular life will cost you $1,500 or less per month in anywhere in Asia. And you don't need much money to generate $1,500 a month. So you can really get free by using this method really fast. That gives you the freedom to create. Like this YouTube video, I can do this because I want to, right? Because I like to, and I don't need the money, right? This gives me something purposeful to do, something useful to do with my time that helps other people, and something that I enjoy doing. I get to train. I say train, I go to the gym, right? Because I love going to the gym. So I go to the gym all the time on a regular basis and have lots of free time to do that. And I don't feel tired or stressed from work because I don't have to worry about none of that shit. And I get to live on my own terms, do what I want to do, go where I want to go, whenever I want to do it. And that is freedom. Now, there are some trade-offs, right? There's not everything is golden and great. There's definitely some trade-offs, and there's some guardrails you can put in place to help protect you. So we're going to cover that really quick. The covered call strategies with these, they cap upside during a strong rally. So what I mean, say if the stock market is on fire and that thing's going up like a rocket, say the stock market goes up 15%, your portfolio will go up, but it's not going to go up 15% like the market's going to do, right? You might go up 5% or 7%, something like that. You're not going to do the whole move that the market does when it's in like this crazy strong upside rally. So that's why some people say these are bad because they don't do that, but they give you money now to be free now. So, but that is a trade-off. You're giving up some of this upside potential for the money now. That's what you're trading. The distributions do vary. You know, the yields can change. Like 2 weeks ago, XDTE paid me 25 cents per share. Last week, it paid me 21 cents. So, you know, the income does vary. Sometimes you make more money, sometimes you make less money. And that's why you need to be aware of how much you're getting paid every single month or every single week, so that way you can budget accordingly. So your budget is on the lower end, and then as your income grows, then you can raise your budget, right? So, but this is a trade-off that the income varies. So you have to be really smart about the way you budget your money and the way you plan, so that way you don't have any issues come up that, you know, could be stressful. There is a concentration risk, kind of, I guess. Like my core is XDT and QDT, which is 70 to 80% of the portfolio. So if there's a stock market crash, then my portfolio is going to crash. But on the flip side of that, if I had a single stock like Tesla or whatever, something like that, and the stock market crashes, that stock is going to crash too, right? But without having other things outside of stocks, right, you're in a definite concentration risk. Like if you're not having real estate, like actual real estate, not rates, but actual real estate or something like that, right? You know, you have a lot of concentration into one particular thing. You are at risk of, you know, suffering during a crash and your income drastically going down. Some of the guardrails you can use to help protect you is, you know, watch your position sizing. So when I say 70 to 80% of my portfolio is in XDT and QDT, like it's not 70% in only one of those, right? I have the money spread out. You know, I have like some over here, some over there, right? You're not going to put like 100% of your money in one single ETF. But then again, you're not going to be spread out across 40 or 50 different ETFs either. That's too much diversification. So you need to be careful about the size of your position though. You don't want like one position to be like $100,000 and then another position to be $1,000, right? That's too big of a swing. You want to try to even it out a little bit. Also, the momentum rules that I talked about with your riskier plays, your mega yield plays, your MSTY, HOOY or HOOW, these leveraged weekly pay funds. Momentum is important. Don't get stuck in these when the momentum dries up and then waiting for a recovery. It's best to already have like I mentioned, your rules set up when you're going to exit, when you're going to enter. If you miss the momentum, don't jump in because you have FOMO. Just wait till the next one comes along. Also, keep in mind taxes and brokerage fees for your country. My tax situation is very different from a lot of other people's. And I can't give you tax advice, but you definitely need to mind your taxes and set aside money for taxes. And also keep in mind the brokerage fees, because some people, have brokerage fees depending on, what country they're based in and things like that. But all these funds that I mentioned to you, for the most part, like the XDTE, QDTE, QQQI, they all have tax advantages. And I highly suggest you go to their website and look at the prospectus for the particular fund and see what those tax advantages are and make sure that they work for you compared to other funds. So let's do an exercise together. Let's build your very first pie, your income pie. I don't know about you, but I like apple pie. And this is my way of getting my slice of the pie. Because right now, the American dream that I was sold when I was a kid, in the 1980s, that dream doesn't exist anymore. Like, you can't just get a job and buy a house and all this other stuff. And those days are over. And this is how I use my American passport and the things that come with it in my advantage to get my slice of the pie. So pick a monthly income target. How much money do you need every single month to live the life that you want to live? For me, a normal middle-class lifestyle is perfectly fine. I don't need a mansion and Lamborghinis and all of that shit. And I can live a normal middle-class lifestyle here in Asia for less than $1,500. So $1,500 would be my monthly income target, I guess, because I can live on that. Next, you're going to choose a core engine, right? What's going to be the main driving force of this portfolio? What's the one or two stocks you can put the most of your money in that you can count on to be reliable to keep paying you? Me, I chose XDTE and QDTE. You can choose what you want. I'm not telling you what to invest in. I'm not giving you like financial advice, tell you to invest in something. It's just what I did. It was chose these two. You can choose whatever you want, but choose a core engine that's you think is going to be reliable and you can count on to provide that $1,000 per month or that $1,500 per month or whatever your target number is. The core engine is going to provide that. The others are just extra. So anyway, after you choose your core engine, you're going to add some income plus growth together. And for me, I chose QQQI for that. And that's a 5 to 10% allocation of my portfolio. I chose this one because it grows, it pays income, and it has a tax advantage. Now you could choose something else. There's lots of good ones out there. There's JEPI, JEPI, JEPQ, JEPQ. They also income and growth, but they don't have the tax advantage that QQQI has. That's why I chose this one. There's SPYI, there's GPIQ, and then there's the list goes on and on and on. There's so many of them. And I suggest you find one of those, income plus growth, to add to your portfolio. And then last, I also chose a thematic income. For me, that's Bitcoin, because I believe in the future of Bitcoin. If you believe in Bitcoin, you could choose something like YBTC and make it 10% of your portfolio. If you believe in some other theme, like semiconductors or rates, like real estate, right? Or, AI, right? You can choose any type of theme and find an ETF or a stock that pays income based on that theme that you believe in. I believe in the Bitcoin theme. Other people believe in AI. People believe in real estate. Whatever you believe in, I would choose one of those themes and allocate a portion of the portfolio to getting income from that specific theme. And then next, I have the rotational mega yield slot, the 5 to 10% super mega yield. And if I rotate it out of one and I don't have a mega yield booster in my portfolio, I just sit on the sideline with cash and wait till one of those momentum plays comes up. When it does come up, I have the cash sitting there waiting that I can put into the mega yield slot. And that is how I built my slice of the pie. And this is just the framework that you can use if you want to build one of your own. Lastly, when it comes to carving this out for yourself, set some rules, right? Define some strict rules and follow your rules. Do not break your rules. I've done this in the past. I've set rules and I broke my own rules. Every time I break my rules, I lose money. Do not break your rules, right? Figure out what rules work for you and follow them. Don't neglect your rules. My rules are revolving around rebalancing, keeping my core at that 60 to 80% level. My rules around momentum, right? When the momentum dries up, I leave. I don't stick around to wait. I've done that before, stuck around and waited and watched my profits slowly slip away. So now I set a rule for myself. When the momentum dries up, I leave with my money. And I also have, like max drawdown rule. How much money am I willing to lose? Like, for example, on the mega yield boosters, when the momentum looks like it's drying up, how much money am I going to let slip away before I cut ties? Because some of them, they look like they're slipping away. They might go back a little bit and then come back up. And so you want to make sure that, and able to avoid a super huge drawdown while you're waiting for it to come back up. Just set a limit, set a rule. I'm willing to lose this much money. And when this much money slips away, I'm done, I'm out. All right, that's some of the rules that I set up for myself. And I suggest you find some rules and stick to them. So that's going to be the presentation and my strategy on what I do and exactly what allows me to be a dividend nomad. I'd love to hear your thoughts below. Got lots of stuff down below too. Discord, free Discord. Go in there. Talk about investing and life abroad, all kind of other stuff. I've also written a book about my journey from being broke and homeless, living on the streets, to now having a life of freedom. It's all here in my book. And check out all the links below. And I'd love to hear from you guys. Have a conversation with you guys, either in the comments below, or I'll see you guys over in the Discord and we can have a chat over there. And hope y'all get free soon. See y'all next time.